A Roth IRA is one of the easiest and most effective things you can do to build your wealth, not only now, but also long term. If you're new to finance stuff and you don't know what a Roth IRA is, it is essentially a retirement investment account that you can put your money in today. That money you already paid taxes on, which means as it grows over time, it grows tax free. And when you retire, you can withdraw that money tax-free. It's basically making a deal with the government saying you can pay taxes now, so you never have to pay taxes again on that money when you withdraw it after retirement. One of the main reasons why a Roth IRA is so powerful is because not only is it tax-free growth, but no taxes in retirement, even on the gains that the money makes. So if I were to invest money right now on the S&P 500, let's say $100 at the age of 28, and over time, hypothetically, let's say it grows to $10,000, that $9,900 that I make for free from the market, I will not have to pay taxes on. You get to keep more of your money long term, and it's perfect if you expect to make more money even later in life. It's super useful versus future tax increases, and it's actually one of the best accounts you can start if you are a young person, or honestly anybody at any age can start one, but it's specifically good for young people because of the compounding you get from the account. The most amount of money you can put into a Roth IRA every year is $7,000. A lot of people get confused a Roth IRA and a traditional IRA, but they actually have a very big difference. The Roth IRA, like I was saying, taxes you now and you're tax-free later, when a traditional IRA gives you a tax break now, but you end up being taxed on it later. It basically just flips the two. A Roth IRA is usually better if you're really early on in your career, if you're super young, or if you're in a lower tax bracket right now, or if you want any certainty when it comes to your retirement plan, especially for those of you that are self-employed like myself. Like I was saying, you can only contribute $7,000 per year to the Roth IRA, and that has to be earned income. So for most people, it'll be from their job. As of the time of recording this, it's $7,000. I believe it might have jumped up to $7,500. For me personally, the past 2 years, I have invested $7,000 maxed on my Roth IRA. And just in the 2 years that I've been doing this, the account has already got an extra $3,000 at almost exactly 21% return that I won't have to pay any taxes on. A lot of people hear the number $7,000 and they think that it's a must do, like you have to max out $7,000 into the Roth for it to work, but that is not true. You can actually put any amount of money you want into your Roth IRA as long as you don't pass that amount. So if you don't have the money right now, you can put as little as $1 into your Roth IRA all the way up to the max of $7,000. The contributions you make towards that account are super flexible. It is not an all or nothing type of account. There are some important other rules, like there's income limits, for example. So if you're a high earner, you might be limited out or phased out of the Roth IRA. There are some ways to backdoor it, but that is an entire different video. Most people, I would say, qualify for the Roth IRA, even if you're self-employed or even if you do make six figures. Just double check with your tax person or double check online to see if you can qualify. Another mistake a lot of people make when it comes to having a Roth IRA is that they will get the buying power for the Roth IRA, but they won't actually invest the money into the account. I know that sounds kind of confusing, but essentially, let's say you put $7,000 into your Roth IRA, you still have to buy $7,000 worth of stocks, ETFs, index funds, mutual funds, or anything along those lines. That way the money can grow with those stocks and ETFs. The Roth IRA is essentially a container, and then the investments go inside of that container. So let's say you start a Roth IRA and you're not really sure what you need to be investing into. You have no idea what's happening. The two easiest things you can invest into, and it's also what I invest into, is a S&P 500 and the QQQ. Honestly, you can really just throw your money all into the S&P 500 and be completely fine. But I really am a big fan of QQQ and some other ones. But if you guys want more information on that, just let me know and I can make an entire video breaking that down. There are some companies that can handle all of this for you, but honestly, it's super easy to get started. You can literally just get any app, whether it be Robinhood. It's pretty beginner friendly. You can use Webull. You can use Charles Schwab. There's a bunch of different options out there. But honestly, I would stick to just I know a lot of people don't like Robinhood, but I would just stick to Robinhood because it's super beginner friendly. And if you have Robinhood Gold, they will even give you a 3% match. I mentioned earlier how starting early is way better for Roth IRAs, and the reason why is because of compounding. So essentially, time matters more than how much money you actually invest. Somebody who invests $1,000 at the age of 18 every year would outpace somebody who invests $10,000 every year at the age of 50. Because the more money you invest early on, the more the stocks grow with that money. And somebody who's 50 years old doesn't have nearly as much years to invest and max out their Roth IRA compared to somebody who's 18 and just getting started. Small amounts over a long time equals huge results in this type of thing. The earlier you start, the less stress you have later. Compounding is essentially your money making money making money. I hear a lot of people kind of scared to invest into a Roth IRA, thinking they'll never get the money back if they absolutely need it. Not true. You can actually withdraw any of your contributions. Now, it's important to keep that in mind. You can withdraw your contributions, but you can't withdraw any of your gains. You can withdraw it tax-free as well. But most people honestly use the Roth IRA as a retirement account or even some type of emergency flexibility last resort type of thing. I would really just look at it as a retirement account, though. That is essentially what it's used for. It should be really treated as long-term money. Anything you put into your Roth IRA needs to be looked at as you won't see this money for another 40, 50 years. It only takes about like 10, 15 minutes to get really set up. You just have to choose a brokerage, Fidelity, Vanguard, Schwab, Robinhood, any of the ones I mentioned earlier as well. You just link your bank account. You can fund your account right from your bank account and choose what investments you want to do. So probably the S&P 500 or QQQ. And you could even set up automatic contributions monthly, which is what I have. And I believe the exact dollar amount is like $583.33 if you do it over the course of 12 months, something along those lines. And every single month at the start of the month, I just get that money subtracted from my bank account and it goes right into my Roth IRA. I don't even think about it. It just automatically happens. It's so easy. And honestly, knowing I'm kind of set up for retirement is such a breath of fresh air and just so much relief, especially as somebody who's self-employed when you don't really have an employer to, give you a 401k or anything along those lines. Also, a lot of people, I think, in our new generation don't have any type of retirement plan. Like a lot of people are working part-time or they have side hustles where they don't have like full-time benefits such as a 401k or insurance or anything like that. So if you can, please do a Roth IRA. Also, if you do have full-time benefits like a 401k of any sort, you can just do a Roth IRA and a 401k. If you're wondering how much you should start investing with, honestly, just do whatever you can afford. Even if it's just 25 to 100 bucks a month, it would definitely help you long term, I promise. Even if it's $1 a month, I know it seems kind of silly, but literally any type of contribution you should be putting into your Roth IRA, trying to get it maxed out every year. And just make it your goal to keep increasing these contributions over time. Like I said, you can try to do the math where it's like $583.33 every month. Or if you maybe get a big paycheck one year towards the end of the year, beginning of the year, you can do it all at once, whatever you think is best for your own situation. Consistency in this type of thing always beats perfection. So don't worry about if you can't max it out. It's not the end of the world. Some more mistakes beginners make is they try to time the market or pick the absolute hottest stocks or like the perfect stocks they see on TikTok or anything like that. A bunch of gurus online. They really, really overcomplicate a lot of their investments. So many people get this idea that being financially literate and knowledgeable about these type of things is really difficult when if you just keep it simple, keep it basic, do your own research. It doesn't have to be, you don't have to sit there and read a bunch of books. You can just do your own research online, watch a few YouTube videos, take what everybody says, the common denominators of what everybody says. So if a bunch of people are saying the same thing, it's probably a good chance it'll be true. It's super simple, and anybody who values flexibility or simplicity should definitely be setting up one of these. So if you watch this entire video and you're not entirely sold yet, I'll give you some actual real dollar account examples. Let's say person A invests $100 a month into their Roth IRA starting at age 25, and they have an average return of 7%, and they stop at age 65. That'll be a total contribution of $48,000, and their account value would be around $240,000. And like I said, they'll have to pay $0 in taxes on that $240,000. Now, what's crazy is that if somebody at the age of 35 is investing double that, so $200 a month, and they do that for the next 30 years, so $200 every month for 30 years, they end up only having $5,000 more than the person who started at $25 and only invested $100 a month. That right there just shows you how important starting early is when it comes to a Roth IRA. Another note is as well is that a lot of these brokerages will give you some leeway. If you, let's say last year is 2025, you didn't have a chance to max out your Roth IRA, but you want to, you can actually still contribute to your last year's Roth IRA up until I believe it's April or March, and still put the max amount for that last year, and as well as max out your 2026 Roth IRA as well. There's a little bit of breathing room that they give you to kind of make up for it if you're just not figuring it out, or if you maybe missed a few payments on certain months. Now, if you're looking to get started, like I said, I do use Robinhood. I'm not affiliated with them or anything like that at all. They're not paying me. I'll just put a link that I have, like a share bonus link. Basically, I get a free stocks, you get some free stocks, stuff like that. I'm sure you guys have heard about it before. Nothing crazy. It's not like I'm going to get like millions of dollars just by you guys using my link or anything. But it's better to use somebody's link than not use anybody's link at all. So I'll put both Robinhood and Webull links in the description. I hope this video helped. And if you want to learn more about finances, consider subscribing and liking the video, and drop some comments down below, and I will be happy to help.